Good morning, it's UPB. It's Friday the 13th, 2014, June 13th, UPBOptionMillionaires.com. The market fell yesterday. Yes, Bears, the market does fall after this grueling run up, really, since the April 15th tax deadline. If you look at OptionMillionaires.com, I was talking about the tech wreck. This was the tech wreck of 2014. That the S&P 500 really doesn't show it as much as the NASDAQ, the QQQs does, as the sell-off started really in March and went to April 15th. And you can see I was talking about this broadening descending wedge, which we had here, this pattern, broke out of it beautifully to the upside, and now broke out a possible double topping pattern. Maybe pull back to this 91 level. We'll see. Futures are rocketing higher this morning as Priceline.com bought out. Open table price line fell a little bit yesterday. Open table, $103 a share. Look at it, it's at 70. At Option Millionaires last week, we alerted the June 7750 calls for 25 cents. They're going to open at, I don't know, $28, something like that. So it's going to be if you bought 10 of them at 30 cents, even as 300 bucks into 30 grand, just about. Woo! Pretty nice payday. I wanted to bring up the IWM because we had this head and shoulders pattern I was talking about even before we started to decline. Actually, if you look, let me just pull the drawing off here so I can get in here. This day, precisely at the blog at optionmillionaires.com, I was talking about how we were running up to it, and I said this is the last bastion for the bears. If we start pulling back here, you're going to start to hear the one or two bears to the left in this marketplace talk about this head and shoulders pattern that's going to get possibly down to this neckline. We'll see what happens. It's going to take a while to form. We can get a bounce back up to this level here without breaking it and still not negate the possible head and shoulders pattern that's forming. Just as we kind of rolled up into the left shoulder and the right head, you can see we put in a lower high, which is usually the sign of a top here. And another lower high, we grinded lower and then we bounced here. So I'd be looking possibly a move up to the 1650. Maybe that'll happen today. Who knows? In spite of the Iraqi weakness, we have oil falling. JB says it. Oil is so 2007. You remember oil, if you pull up a chart for the USO, gives you a good indication of what was happening back in 2007. Everyone's like, oh no. Actually, pull up the 10-year chart. That'll be it. There we go. And you remember we started off here and it's just pure speculation before a complete collapse. And actually remember back in October of 2008, after the big decline and filling up my car with gas at $1.30 a gallon. Imagine that. Right now, we've become so accustomed to what, $3, $4 a gallon, depending on where you live. It's become the norm. So what's another dollar or two added to it, right? Of course, you hear about oil. I think Kramer was talking about it last night. We've heard this for a while. It's kind of like a tax on the Americans driving their cars, having to pay more. So that's less money to spend at restaurants, which is why Priceline bought Open Table today for 46% higher than the closing price. Let's go over some charts. So I did IWM. Look at TLT. The bond market rallied yesterday as stocks started to fall. And we need to pull up the longer term chart. You can see this wedge that's forming. We're starting to get to that point here where we're going to break out. I think we're going to break out. I mean, that's where it looks like. At first, I thought maybe we would decline down to the 105 level. We started to decline. We started to pull back after we broke out above this resistance line. And now we're below it. We're getting really close to breaking out. And the one reason I think is because if you look overseas, interest rates are lower on Treasury notes than they are here. So you're, for instance, 2 years ago, Greece was about to collapse. Nobody wanted to buy their bonds. And now they're yielding less interest than a Treasury note here in the U.S. I mean, how does that make any sense? So people are putting their money here in Treasury bonds in the U.S. and getting a better yield and a more sound economy, supposedly, you would think. So that's TLT. We'll pull up a chart here of Netflix. I think is pulling back. It's got some great spikes intraday. Yeah, it's tough to hold on even yesterday, but you can see we put in the lower high here and we're starting to roll over. I'm looking for a move down to maybe this 380 level. Who knows? Maybe we'll fill this gap at 330. But I have the 405 puts. They're still way out of the money, over 3% out of the money. But I think it's going to happen. Even when we're at 436 the other day, I still have my puts. I'm just holding through. Caterpillar, same kind of trade, starting to roll over. I got my puts right at the multi-year highs here. We're in this channel. I think we're going to pull back down. We already started yesterday down 1.88%. I got the 107 puts. They closed the day 2 days ago at 10 cents. I got them at 20. It was down 50%. Guess what they were at yesterday? 70 cents. So I can see this continuing to the downside. I love Caterpillar for downside. How about the VXX? I got some VXX $31 calls the other day at 39 cents, something like that. And they went to $1.40 yesterday, $1.50. This pre-market action, though, is probably going to put a little crimp in it, but you can see it's starting maybe to find a bottom here. I know this is one of the stupidest trades going along this VXX, because if you look from a long-term perspective, yeah, since it came out in 2009, it's been nothing but a downside. But if you look from a short-term perspective, there are bounces here and there in between, and especially when the market isn't pricing in any kind of a big move, like they weren't for this time around, this option expiration period, you can get some cheap options for a move to the upside. So we'll see if we can get a continuation there. It might move into next week. We have this chaos going on in the Middle East. Oh no! It's another headwind. Last week it was Amazon. I got the Amazon 312.50s and the 317.50 calls yesterday. Goldman Sachs upgraded them to conviction buy. And those 312.50s from 84 cents went to something like $16, $17. I got the 317.50s at 21 cents. Those went to $13 2 days later. But you can see Amazon here after we broke out, that was last week, came down to support yesterday, down 2.77%. Thank you very much, Goldman Spectacular. Add them to the conviction buy list. Anyway, it doesn't matter. From a technical perspective, as long as we hold this trend line support, upside is still intact. And I think over the course of this year, it's going to head back to the $400 level. Apple's pulling back here. Pre-market was down to under 91. We could see it possibly getting to this $90 support level before heading up to triple digits. You can see it's a really nice pattern here. And yeah, it could use a little break. You look at the studies here, we're overbought, certainly overbought. And we can use, just like the market is overbought, and we pull the studies off here. And you can see we're overbought. We got a little sell signal there on the RSI. So a little pullback here, even to this moving average here, is certainly not unwelcome. You'd hate to see a market go straight up and then everybody sell at the same time. No, more of a gradual pullback. It's healthy for the market. UPB here, optionmillionaires.com. So it's going to be a great day for open call holders. We alerted those to the blog at optionmillionaires.com. At 30 cents to 77.50 calls, there's already people in the chat room. Going to have a great day and an awesome weekend. One little trade can make your entire year, month, life. All right. I'll see you in the chat room at optionmillionaires.com. Everyone have a great trading day. Goodbye.